factories. I'm Sebastian Salek, and this is Bloomberg. Francine.
Sebastian, thank you so much. Now, these are your markets. This is what I'm looking at overall. There's a little bit of a turn to the market, as Tom would say. If I'm looking at some of the things that I'm watching for. So first of all, there's a lot of talk about the euro risk premium. Overall, European stocks are actually struggling to carry forward the rally that started with Japanese and U.S. stocks. If you look at the S&P 500 last week, it notched the best week in 5 years. Today, oil advancing, dollar standing against major peers. But overall, I'm also looking at German bonds. They retreated. The euro edging higher with the British pound. There's quite a lot going on today. And yet, there's a little bit less market volatility than usual. It's certainly less trading volumes. That is because, first of all, it is President's Day in the U.S., so happy President's Day to all of our U.S. viewers. And it is also Chinese Lunar New Year in the U.S. This is what I'm looking at when you look at monetary policy, the easing of or not, whether we go to a new paradigm for 2018. This is without a doubt my chart of the week. Now, the Fed fund futures, you can see there, are nearing the return. That's the rate where it's no longer stimulative. And this is basically a very simple chart charting what we call the natural race of interest rates. It's in white. I will push it out for our radio listeners. Good morning to DAB London Digital Radio. And then in blue, you have the Fed fund futures. So it gives us a little bit of thing to talk about and whether at some point the weaker pound becomes less stimulative. Now, Japanese shares have pushed Asian higher this morning, though markets in Hong Kong and China remain closed for the holiday. U.S. equity futures point higher despite those markets also staying shut for President's Day. In the fixed income space, cash treasury trading is closed for the holiday amid U.S. 10-year yields approaching 3%. Well, markets will be watching a raft of auctions totaling $258 billion this week. In a recent note, Al Jabri says there are reasons